Is investing in crypto and Bitcoin akin to gambling, or is it a wise investment? This question sparks countless debates across living rooms and online forums around the globe. In the past decade, we've seen the rise of a new form of currency. Cryptocurrencies. Bitcoin, the pioneering digital coin, led the charge, creating a ripple effect that ushered in thousands of other cryptocurrencies. Each one promising to revolutionize the way we conduct financial transactions, all while providing a level of security and anonymity that traditional banking systems can't match. Yet, with this rise, comes volatility. The crypto market is well known for its roller coaster-like price swings. One day you're on top of the world as your portfolio's value soars. The next, you're left reeling as the market takes a nosedive. It's this unpredictability that has many people comparing crypto investing to a high-stakes game of chance. On one hand, we have those who view cryptocurrencies as the future of finance. They see it as a sound investment, a digital gold rush of sorts. They believe in the technology behind it, and they're willing to weather the storm of volatility for the potential of high returns. On the other hand, there are those who view the entire crypto market as nothing more than a speculative bubble. To them, it's akin to walking into a casino and putting all your money on black. They argue that without any tangible assets or government backing, cryptocurrencies are inherently risky and likened more to a gamble than an investment. These polarizing views create a fascinating dichotomy. Is crypto a wise investment that requires patience and a deep understanding of the technology, or is it a gamble, a game of chance that could leave you empty-handed? The truth likely lies somewhere in between. Like any investment, there are risks involved. And like any gamble, there's potential for big wins and significant losses. One thing's for sure though, the world of cryptocurrencies is a complex landscape that demands our attention. So let's dive deeper and compare these two seemingly different activities. To understand this comparison, we first need to grasp what cryptocurrency, and especially Bitcoin, really is. Cryptocurrency is a form of digital or virtual currency that uses cryptography for security. Unlike traditional currencies issued by governments, cryptocurrencies operate on a technology called blockchain. Now, what's blockchain, you ask? Well, imagine a decentralized public ledger where all transactions are recorded. That's blockchain for you. It's transparent, secure, and it eliminates the need for a central authority like a bank or government. Now, let's talk about Bitcoin. Launched in 2009 by an unknown person or a group of people using the pseudonym Satoshi Nakamoto, Bitcoin was the first cryptocurrency and remains the most famous and valuable one. Built on blockchain technology, Bitcoin introduced us to a new way of transferring value from one person to another, digitally and without the need for intermediaries. Bitcoin, like other cryptocurrencies, is created through a process called mining, where powerful computers solve complex mathematical problems. Once solved, these problems validate transactions and add them to the blockchain. For their efforts, miners are rewarded with new bitcoins, thus increasing the total supply. Now, here's where it gets interesting. The potential for high returns in cryptocurrency investment, especially Bitcoin, is significant. Remember, Bitcoin was worth just a few cents in its early days, but at its peak it reached nearly $65,000. That's a massive increase, right? But don't get too excited just yet. Cryptocurrency, and Bitcoin in particular, is renowned for its volatility. Prices can skyrocket one day and plummet the next. This volatility means the risk is high, and just as you can make a fortune, you can lose one too. So, while it may seem like a gold rush, it's essential to understand that investing in cryptocurrency is not for the faint-hearted. Now that we have a grasp on cryptocurrency, let's move on to understanding gambling. Gambling, a pastime loved by some and loathed by others, but what's at its core? Fundamentally, gambling is the wagering of something of value, typically money, on an event with an uncertain outcome. The primary intent is winning additional material goods or money. Now, the critical element here lies in the word uncertain. Gambling relies heavily on chance or luck. It's like tossing a coin. You don't know if it'll land on heads or tails. You're betting on an outcome that's not guaranteed. Moreover, the nature of gambling is such that it harbors the potential for both high gains and significant losses. It's a double-edged sword. One moment you could be on cloud nine with a winning streak, and the next, you could be in the doldrums, nursing a hefty loss. With an understanding of both cryptocurrency and gambling, we can now start comparing. So how does investing in cryptocurrency compare to gambling? A question that's been on many minds. Let's delve into this comparison, starting with the similarities. Both crypto investing and gambling inherently carry elements of unpredictability. When you place your money on the line, whether on a roulette wheel or a digital coin, the outcome is uncertain. You're banking on a favorable turn of events, and yes, there's a thrill in that uncertainty. Then there's the potential for high returns. A single well-placed bet can yield a substantial windfall, just as a well-timed investment in a burgeoning cryptocurrency can lead to impressive profits. In both scenarios, the allure of striking it rich can be quite compelling. And of course, where there are potential high rewards, there's also the risk of loss. Both gambling and crypto investing can lead to significant financial loss if things don't go as planned. In fact, the risk of loss is an integral part of what makes both activities so exhilarating for some. But while these similarities exist, it's crucial to understand that cryptocurrency investment and gambling are not identical twins. They're more like distant cousins. For instance, crypto investing is influenced by market trends. Economic factors, technological advancements, and regulatory changes can all impact the value of a cryptocurrency. Investors can study these trends and make informed decisions, something that's less applicable to the roll of a dice or a spin of a roulette wheel. Moreover, cryptocurrency has the potential for long-term growth. Unlike a gambling bet, which is a one-off event with immediate win or loss, an investment in cryptocurrency could grow over time. It's an asset that you can hold, and its value can increase as the technology evolves and its usage expands. So while crypto investing does share some characteristics with gambling, it also incorporates aspects of traditional investing. The influence of market trends and the potential for long-term growth set it apart from pure chance-based activities. As we can see, while there are similarities, crypto investing and gambling are not the same. Whether it's investing or gambling, the key is to make informed decisions. Let's talk about making wise decisions. The world of cryptocurrency and Bitcoin can be somewhat of a whirlwind, and it's easy to get swept up in the thrill of it all. However, it is essential to approach this world with a clear mind, focused on risk management and thoughtful decision-making. Risk management is, at its core, about not putting all your eggs in one basket. It's about understanding that while high risk may lead to high reward, it can also lead to significant loss. It's about being prepared for the potential downside and being willing to accept it before jumping in. In terms of cryptocurrency, this means not investing more than you can afford to lose, and not expecting immediate, sky-high returns. Just as important is doing your research. The crypto market is highly volatile and influenced by a range of factors. Staying informed about these factors, understanding market trends, and keeping a close eye on your investments can help you make wise decisions. Research is not just about reading up on the latest news, it's also about understanding the technology behind cryptocurrencies, the problems they're solving, and the potential they have for future growth. And finally, diversification. Just as you wouldn't put all your money in one stock, you shouldn't put all your money in one cryptocurrency. Diversifying your investments across different assets can help spread the risk and potentially offer more steady returns. Treat investing in crypto not as a game of chance, but as a strategic move. Be patient, be diligent, and be prepared for ups and downs. Remember, the crypto market is not a lottery ticket. It's an investment opportunity that requires careful thought, in-depth understanding, and sound decision-making. Now, it might seem like there's a lot to consider, and there is, but don't let this discourage you. Embrace it. Embrace the opportunity to learn, to grow, and to potentially benefit from what could be one of the most significant financial revolutions of our time. Remember, informed decisions are the difference between a calculated risk and a blind gamble. So, is investing in cryptocurrency and Bitcoin gambling or a wise investment? It's a question that stirs up a lot of conversation and debate. Over the course of this video, we've delved into what cryptocurrency and Bitcoin are, the nature of gambling, and the parallels and disparities between crypto investing and gambling. We've discussed that cryptocurrency, like Bitcoin, is a digital or virtual form of currency that uses cryptography for security. It's a high-risk, high-reward world where the stakes can be incredibly high. On the other hand, we've talked about gambling as a game of chance, where outcomes are unpredictable and the risk is equally high. We've compared these two realms, highlighting that while both involve risk, the approach to each can significantly influence the outcome. Cryptocurrency investing requires knowledge, strategy, and patience, much like traditional investing. Ultimately, the answer depends on your approach. If you treat it like a gamble, it will be won. If you treat it as an investment, it can yield returns in the long term.